SP 500 insider trading like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of this video is SP 500 insider trading like a pro. All right. We're going to start analyzing the Standard & Poor 500 index on the yearly charts. We have here, you can see here between 1998 up to 2012, the S&P 500 was consolidating between the level of 904.71 and the level of 1469.67. These are the lines that I have on my chart here. So there was a consolidation in this session, all right? Remember 904 and 1469, okay? So the price was consolidating here. And then we have here a breakout. In 2013, we have a breakout. The price break above, okay, the horizontal channel. Using market geometry, we will measure the width of this channel here, and then we will project it to the upside, okay? So this will be the ultimate bullish target for this breakout here that was for nearly 3 years now. So we reach the target level. This is a conversion point. So if you do not know anything about conversion trading or conversion signal, go to www.stochastic-macd.com and click on convergence signal. So the S&P 500 is at the conversion point. And that's why we see a bit of a pullback recently, because what usually takes place at a conversion point, the bullish trader that were buying up to the target zone will be willing to sell to close their bullish position. All right, these are position traders. All right. Position traders will close their trade, will position bullish traders will sell to close their bullish position. As they are selling, the bearish traders that were waiting, that were standing aside, will join the bullish traders and will sell together. At the conversion point, both bullish and bearish traders will sell together or will buy together. So at this level where we are now at 2048, all right, that's the level we are watching. Both the bulls and bears are selling. So the position trader must take some profit. That's why we see a bit of pullback up to this low of this candle on the yearly chart. Okay, and now the bear also are joining here to sell. So what do we need to do here? At this point in time, what I would say to traders, priority bullish signal only above the level of 2048. Above 2048, priority bullish signal. Doesn't mean just buy. It means use the top-down trading method. If we receive a buy signal above the level of 2048, we will buy. Break above, retest, turn around without violating the market pattern. Okay? The next key level, so priority bullish signal above 2048, and in that case, we are also saying indirectly to traders, priority bearish signal below the level of 2048. At a resistance level, below that level of 2048 on the edge, without violating the market patterns, we will sell on the edge. Does not mean that we cannot buy below the level of 2048. If we are buying below that level, we need to control the risk. Okay? So it doesn't mean buy here and sell here. It means priority to buy signal here above the 2048. If we are selling above that level, we need to be careful. The opposite is also true. If we are buying below this level, 2048, we need to control the risk. Okay? So that's professional will trade around key level. Ordinary traders will just place a trade and buy anywhere, anyhow. You can see that the professional are selling here now. It's a specific price level. It's a key level. They bought it here at 1469. And this is what's happening in the market. Professional will enter the market at a specific price. Ordinary trader will buy and hold anywhere, anyhow. don't get into that game. All right, this is about S&P 500 insider trading, like a pro. So we know about this key level 2048. We also know about the level of 1469. All right, there's another key level here, which is the median line of this channel here, roughly. Okay, I just put it there. The middle line of this two line is 1742. Note it down. All right, that's how professional trading, they know the key level 2048, the next level 1742. All right. If you start thinking that way, you'll start making decisions like professional traders, okay? So that's it. 2048 is a key level. 1752 is another key level for the S&P 500 or the Standard & Poor 500 index. All right, so if the price going down, the professional watching now, if it reaches this level of 1752, they will be willing to take some profit. Bearish traders that are joining the bull to sell at this point in time. If the bearish momentum continues, okay, and the price reaches this level of 17452, they will be willing to take some profit. All right. So these are the level where the professional will make decision. Okay, they want to sell here, must break below, retest, turn around. Next level, break below, retest, turn around. Break above, here we will say break above, retest, turn around, all right, on the edge, all right. So this is what we see on the yearly chart. So there is a consolidation that was taking place right here between 1998 and 2013, all right, where then we have a breakout, we project a channel. Now we are at the convergence point, navigation of the price, okay. This is how professionals are trading, okay. Now, let's zoom into it because it's a trading mistake to stay on one time frame alone. So we are on the yearly chart. Let's go now quickly to the monthly chart. I don't want this video to be too long. So on the monthly chart, the market pattern is a rising channel. So here it is, it's a rising channel, but we are now seeing a bit of weakness in that bullish progression because the price is now below the median line of the bullish channel. So they slowed it down. Prior went back to retest the median line, which is the orange line here, the median line of the rising channel, and they sold it on the edge of the median line of this rising channel. So priority to bearish signal below the level of 2048, as I said to traders. If the price going down, now we have another information here on the monthly chart. That's why it's so important to use a multiple time frame. So if the price going down, professional also watching the edge of this rising channel. You have to be careful how I draw this channel here. You can see I choose this point here. This is the low of the month of March 2009. And I also select another low here. I want you to know which one I selected here. And I also selected the month of September 2011. Okay, that's how I draw this first line here. This low here and this low here. Allow me to draw the first line. And I selected the high of the month of April 2010 to draw a line that is parallel to the first one. Then I draw the median line. Okay, so now we see it going down. Professional are watching also the edge. You see, the first time they sold it, it come near the edge of this rising channel. So if the bearish momentum continue, we need to watch the edge of this channel here on the monthly chart. So market pattern is bullish. If we are you can see here we can start selling because it's below the median line of this channel. But remember, it's a rising channel. The SP-500 is bullish, okay. The market pattern is bullish, all right. But we are now below the median line. Okay, we can sell below a key level 2048, all right. If we receive a valid sell signal on the edge. Okay, so pay attention to this, the edge of this channel. So if it's a bit messy, in my view, the market will remain bullish. As I said to traders before, the market will remain bullish up to 2016. You will see a bit of blah, blah, blah going on. But remember that the market will stay bullish for a while before, we will see more bearish, action in the market, okay? So if you want to sell, it break below the edge of the channel, okay? As soon as it's out of the channel, what we need to do, we'll project this channel in the direction of the price, right here. Okay. These are parallel enough. That's it. So if the price is out of the green channel, we will project the channel in the direction of the price right here. And we need to watch, okay, the media line of the second channel, the projected channel. Okay, so it may come out only to come near the media line of the second channel. We will see, all right? We will see what will happen, okay? All right, so this is what we can see on the monthly charts, okay? You want to sell, break below, retest, turn around. You want to buy, break above, retest, turn around. On the edge of a trend line, on the edge of a, okay, no more support and resistance level, this is how we want to come into the market, all right? If you receive a sell signal, and the same signal is at the wrong place, we may decide to walk away, all right? Very, very important, okay? When we draw a channel, we want to remember also the median line of the channel. So market pattern on the monthly chart is bullish, okay? It's bullish, but the price is now, so if we go down, okay, so now from the monthly chart, we don't want to stop on the monthly chart. We want to go now to the daily chart. We are zooming into it, coming back a top-down trading method from the higher time frame to the lower time frame. So we see the bigger picture. We are coming down, coming down, coming down. Now we are on the daily chart, okay? All right. Now, on the daily chart, I want traders to pay attention carefully to what I'm going to discuss here, because I can say more. Let's see, now 11 minutes, that's very good. So, now, on a daily chart, my friend, because a lot of swing traders will only look at the daily chart, which is wrong. So, traders love a lot of daily chart. Professionals prefer the 3-day chart and a 2-day chart to avoid, okay, what I call distortions. A lot of distortions will take place on the daily chart. So if one is trading, okay, the SP-500, one must, okay, use a top-down trading method, analyzing the SP-500 or the Standard & Poor's 500 index from the higher time frame, yearly chart, monthly chart, and drop it down. See the bigger picture. So we know where we are now, okay. So now, on a daily chart, okay, what's happening here? We see a consolidation on the daily chart, okay? Here it is. It's because the price was in a rising channel on the monthly chart, but on the daily chart, we see now the price is consolidating on the daily chart. Why? There are various reasons why the price is consolidating. You need to get that. Either we have a surge in trading volume can create a consolidation, or the price is at a key level, we may see a consolidation, or there is a very important economy news that the market is expecting. There is one, I can tell you now, it's coming on the 16th of December 2015, the Federal Reserve interest rate decision. So this is one of the reasons why we see a bit of pullback and all the blah, blah, blah that is going on for some days. The market is preparing, is waiting for that high impact economy news. For traders that are following us, they know our trading method, combining the technical analysis with the fundamentals and economy news. Google Finance, Yahoo Finance, Forex Factories. One cannot, okay, because now we have a lot of hedge funds in the market that are using economy news. We have Twitters. There are programs that are analyzing the market sentiment through the Twitter feeds, all right? One cannot use the technical analysis alone in the market anymore, all right? If that's so important, it's too important to ignore that, okay? So the economy news can change the dynamics of the market. So right now, why the price consolidating on the daily chart is due to the high, this key level, and also most importantly, that economy news that is due on the 16th of December. Please do not forget that date. You may decide not to trade that day, or you may trade after the economy news. All right? All right? 2 p.m. Eastern time. All right? There we are. So professionals are adjusting their portfolio, preparing hedge fund, banks are adjusting their portfolio because of that major economy news, the expectation that the Federal Reserve will put up interest rate. Adapt it, we'll see. Adapt it a bit, but we'll see. We'll see. All right? Because they're under pressure. Unless the dollar yen is going down more, we will see, but they are under pressure to put up interest rates. So On the daily chart, we know now there's a consolidation taking place. Okay, so now we're on the daily chart. So here we are, consolidation. Okay, if I adjust my line correctly. Okay, the top of the consolidation is zone of 2115, 2115. All right, 2115. All right, the lower part of the consolidation. Let me adjust my line correctly. Right there, I prefer 11. So the lower part of the consolidation is at 1994, 1994, 1994. That's the lower part of the consolidation. So I'm going to adjust my line. Hopefully, I'll get it correctly here. Okay, yeah, you see that zone. Okay, so now I have it at 1997, so no big difference. All right, so this is the levels that day traders must watch. So you see here, so we are consolidating. So next week, watch it. There's a high chance that it may come near this low. Remember why the price consolidating is because of that economy news that is due on the 16th of December 2015. So if you are watching this video a few years later, the point I want you to remember is that economy news can change the dynamics of the market. Federal Reserve, central banks, monetary policy can affect the market. Position traders are watching the Federal Reserve policy and adjusting their strategy accordingly. These are big market players that are influencing the market. So we try to go into their mind, how these hedge funds, okay, the banks, okay, the big financial institution, the big financial institution, okay, the investment banks are thinking. So the Federal Reserve was devaluing the dollar. The money went into the commodity, all right? They were selling the dollar yen, all right? Now the Federal Reserve is ready to put up interest rates, and the money flow will change a bit again, all right? So this is, we want to watch the market participant, especially the big market participant, the hedge fund, the big banks. The Federal Reserve will make decision on the 16th of December. They are preparing their portfolio, adjusting their portfolio. The price now consolidating between these two levels here. And we, as a day trader, a swing trader, we need to be aware of it. All right? If the price are out of this blue channel on the daily chart, we will project the channel to the lower part. This will allow us to navigate, okay, on the daily chart also, okay? Here it is, here it is. As always, we draw a channel. Do not ignore the median line. Be aware of the median line. All right? So here we will prefer to, if you are desperate to buy, it's better to buy near the level of 1994 if you receive a buy signal in that zone. It's a key level on the daily chart, okay? Rolling it down, you see, it's a consolidation taking place here. Traders are selling at the top here and are taking profit at the lower part here. If the price, the bearish momentum will continue, which I believe is a high chance that it may continue, we will see, until that 16, okay? Want to sell, break below, retest, or at least see a bearish chart pattern on your signal time frame on or near this level of 1194. All right, and so on and so on. Okay, it makes sense. This is about the SP-500 insider trading like a pro. All right, professional traders are trading around key levels. For the SP-500 index, the Standard & Poor's 500 index, on the yearly chart, we see that the price is at a conversion point, the level of 2048. The bullish position traders are exiting their bullish position by selling at that key level. Bearish traders that was waiting are joining these bullish traders and are also selling at the same level of 2048. For those reasons, traders must give priority to bearish signal below the level of 2048 and bullish priority to bullish signal above it. All right, price going down, traders must watch the next key level, which is 1752. All right, if we switch our time frame to the monthly chart, the market pattern is bullish, but the price below the median line of that rising channel. one must also watch the lower part of the rising channel on the monthly chart. If the price out of that channel on the monthly chart will project the channel to the other side, okay? On the daily chart, we can see that the price at a resistance level, 2048, and there is a consolidation taking place. And there is another reason why the SP 500 is also consolidating here, is due to high impact economy news. There are various reasons why a financial instrument may consolidate. Whenever you see a financial instrument consolidating, you must ask the question, what are the factors that are causing this consolidation? Surge in trading volume may cause a consolidation. High impact economy news may cause a consolidation. And also, all right, key levels, market acknowledging a key level may also create a consolidation. In this case, we have a combination of a key level and a high impact economy news that is due on the 16th of December 2015. If you like this video, please give us the thumbs up. If you dislike it, do not walk away. Feel free to give us the thumbs down so you may know that you dislike it. All right. And if you love this video, all right, feel free to share it on Google+, on Twitter, and also on Facebook. As always, to trade like a pro, one must use a top-down trading method, all right? The setup, okay, the validation of the setup, the signal, and the low-risk entry point without ignoring, okay, the market environment, the economy news, and the fundamentals. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about the S&P 500 insider trading like a pro. Speak to you soon.